Today's topic, when to hire a financial planner and what do they actually do? Yeah, we're going to get into it. It's one that's near and dear to my heart because I'm actually a financial planner. But the key today is to explain everything as if you'll never work with me. But we're going to get into it. This actually came from, I did a few pieces of content this month for questions that we saw on our Physician Sense side, which that is the podcast YouTube channel that I co-host with the one and only Tyler Olson. But I thought this was a great question. And again, a topic that we don't really cover, or we haven't really covered on this side of the channel in terms of, what are things that you're looking for? And the initial question was really well worded in terms of, hey, I am a younger physician. I have decent investment knowledge, which based on their notes, they did. When do I need to hire a financial advisor? Do I need to hire a financial advisor? And most importantly, what do they actually do, right? Where's the value that comes from the financial planner? And it's a question that a lot of people likely have, or hopefully they do have, because it is a fantastic profession to add value back to you, but you got to make sure you understand all the moving parts that come with it. We even covered that in our last video, which we labeled as what to look for in a financial advisor. So good tidbits in that one too. That was also in this month's lineup of videos. Well, let me do this. Before we get into it, I got to always put this plug in a little bit earlier now, but if you haven't subscribed to the channel, go ahead and subscribe now. Click on the bell icon. You'll also get a notification every time we release a new video, which is now weekly because that's how much we love you. Okay, let's get into it. So when to hire a financial planner? I'm going to start with this one. You might not need one. You may not need a financial planner. I started with that on the other video, what to look for in a financial advisor, but you might not need one. I usually do suggest even true DIYers that really have good knowledge, it is a good idea to have someone check your work, right? Maybe you will have someone do a one-time plan for you. Maybe you'll have some hourly work done. That's really good. Now, the one thing I usually note on our prospect calls or icebreaker calls is this. Most people get hung up on the investment side. I want to say it is complicated. I don't even know if I would say it's complicated. It's more or less overwhelming, right? You see this ticker, you hear about this, you do this, your friend's doing this, they're buying penny stocks. What the heck's a penny stock? I heard indexed ETFs. I'm going to want to be passive. Someone said mutual fund. It gets overwhelming. And that's where most people kind of get that deer in the head, like, wait, I got to do all that? So for most people, if you're going to be a DIYer, one part you got to be comfortable with is investment management on your own. And I will usually describe it like this. If you come to me for a financial plan and I tell you you have to do a backdoor Roth IRA every year, you should be able to take that and say, okay, yeah, I know I got to put the money in traditional IRA. Okay, yep, convert it over. Yep, once it gets to the Roth, I'm going to do my 4-fund portfolio or whatever portfolio you're going to build, modern portfolio theory, and I'm good. I'll do it again next year. Like, you don't skip a beat. We get nervous when people go, I'm a DIYer. I can do this on my own. Wait, how do I do this backdoor Roth? Oh, when it's in the Roth, you still have to invest it in? I didn't. Okay. What should I put it in when it's over that? That's where we start to think like you should be leaning towards some help with that. Now, that is my easy answer to when to hire a financial planner. That is usually the most complicated part. Early on, accumulation investing, in my opinion, is much easier than decumulation investing. What's that mean, Chad? Well, in your accumulator years, when the money's going up, right? You're going up the mountain. That is where you just save. In an ideal world, you can keep it. I mean, you still want to be aware of the long term, but low cost, indexed ETFs, control your emotion. Not as worried about, well, is this bucket properly balanced with this one? I'm going to pull assets from this bucket, then I'm going to go to this one. You want to start to build that idea in, but at this point, it's really just save. Again, still following low cost diversified portfolios through those investment buckets, proper emergency funds, all those things. It gets more complicated when you start to come down the mountain, right? That's what we call decumulation planning. So, all right, now I'm getting closer to retirement. I actually have to start pulling money out. Are my portfolios built in a tax efficient manner? Is there anything I can do in a tax efficient manner to make these kind of in a better spot for that decumulation planning? Which bucket do I go to first? What if I start to get near some of these IRMA limits, right? We won't even nerd out on that, but just some of these items. One of the biggest things in decumulation planning years, Roth conversions. Possibly the biggest tax benefit you're going to have in your entire lifetime could be this window of Roth conversions from the time that you retire until those RMDs start, required minimum distributions, which are currently at age 75 for most of us. So decumulation planning also has a whole new layer, a whole new world to that. So for example, you will see a lot of good DIYers that'll hold it all on their own all the way up until later in that phase. That's kind of been our largest jump in new clients, are these clients that now they built it. Now they're like, shoot, how do I actually start to take it out efficiently? That's kind of been our biggest jump in there. And that's why you also see a lot of advisors focus on that retirement community too, because there's a lot of value add in that decumulation side of planning. So it's not a perfect answer, but if you're not comfortable with the investment side, the sooner you likely need to have a conversation with a financial advisor. Now, let me add context onto, well, what do they do? Or as I labeled, what should they do? I'm going to use another piece of research here that is not my own. I'm going to put that in the show notes. I've noted him before. His name is Michael Kitches. He's like our nerd of take it to the next level. Very good research, great team that he works with. So he did a great post. This was actually challenging another very popular person in the personal finance side of it. But the reason why I'm using this post is because towards the end of that post, they list these research studies on what these certain companies think is the actual value add financial advisors provide. And I'm going to use this because I want you, this is partially on, hey, when do I hire a financial planner? But this is more tied to like, what do they actually do? Because I do think there's still a big stigma out there that you think financial advisor, oh, they just do investment stuff. My investments aren't that complicated. I got a 403b, I got my Roth. I don't know, it's not that. Where in reality, I always describe to our clients and even prospective clients, like I do think investment management is one of the more boring things that we do. It is certainly a huge value add, as you're going to see here, but it's not our biggest value add. We do think there's other areas that we provide a lot more value. So 3 different companies. One is Envestnet, one is Vanguard, one is Morningstar. They all did these different studies. Again, I have this in the show notes below, the entire blog post, but scroll down to the bottom, you'll see this chart that I'm referencing. 2 of them, Envestnet and Vanguard, pretty much said that they believe a financial advisor adds about 3% of value per year. And now, why do they build the study this way? Well, they built it this way because usually most advisors will charge like a 1% AUM fee. Again, it's usually tiered based on assets, but just kind of stick with me. So that's why they're using that term. So they both say around 3%. Morningstar actually used a little bit lower, almost half that actually. They use about 1.82%. That's not the main takeaway. I want to read the categories and then provide a little bit of context. All right, 7 categories. Bottom one caught me off guard. That's just the total of them. Very good with numbers, I promise. First category is financial planning. I'm going to read them across. Envestnet says that financial planning can add over 50 basis points. If basis points are a new term to you, that just means 0.5%, so 0.5%. Vanguard said this is included in the behavioral coaching, which I'll get to in a little bit. And then Morningstar labels it as comprehensive planning varies, which is actually probably the most real answer there, because there's a lot of people that say they do comprehensive financial planning, but that could mean a lot of different things to a lot of different people, to a lot of different firms. So I kind of actually like how Morningstar is like, hey, we're out. We can't provide good value here, or at least a number, because it can be very different from one firm to the next. So let's use Envestnet, where they say, over 0.5%. To us, financial planning is putting everything together, getting everything organized, and looking at what that looks like going forward. So this is where your advisor nerds out on getting all your details organized. This is where you get into like cash flow planning and, hey, I want to buy a home. Is this too much home? Hey, I'm going to add a car. Hey, we're adding family planning. All those moving parts that come into play there. That's what we're trying to really build around here with the actual financial planning topic. But again, that can vary. I'm sure if we had 10 advisors in here, we'd all describe what they label as financial planning a little bit differently. But that is a very important topic to look at there, especially when someone's using the term financial planner. And for most of you, you're looking for someone that does do that comprehensive. You're not just coming to them for, hey, I need disability insurance, or hey, I only want to do investments. You have that total picture built in there. The next few are investment based. So next was asset allocation. Envestnet puts asset allocation at 52 basis points, very precise. Vanguard said, higher than 0, but not a huge ton. And then Morningstar once again is like, hey, we're kind of out here. We're going to put optimal allocation varies. For all of them, they kept them open-ended in defense of the Morningstar report. So asset allocation, and this is what I mean by how much knowledge do you have in the investment world? Asset allocation to most financial advisors should be like the simplest thing out there. You can look at a portfolio, you can say, hey, here's how I want to build it. This is why I want to build it. This is your Roth IRA. It's going to be a little bit more aggressive because you're not going to touch this thing for decades. Hey, here's your cash fund. That should truly be cash because it's called emergency fund. Here's your taxable account. It's not 100% in equities, but it's not 100% in bonds. Maybe a 60-40 mix. We'll sprinkle in some muni bonds in there because you're high income. That's what we mean by asset allocation. How do those actual pies fit your financial plan? So that's what we're looking for in asset allocation. Again, numbers vary a little bit, but this is, again, what you're getting from comprehensive planning firms. Investment selection. This would be taking it, instead of just the pie, you're getting into the actual individual funds. That's what I label as investment selection. Now, Envestnet puts it around 60-ish basis points, so 0.6%. Vanguard says, hey, this is included in our cost-effective implementation. Morningstar says they put a dash there. So again, coming back to Envestnet, because they at least gave us a dollar number for all these categories, they're listing it as around 60, 65 basis points and actually picking the funds. But if you're sitting there thinking to yourself, well, I don't know how to build a proper allocation. I sure as heck don't know which funds to pick. Good examples of why you may need a financial planner, right? That's what they're going to really help you with. Now, there's also other solutions, right? I'll put a plug in here for Vanguard. Vanguard has their PAS system, their personal advisor services, where you pay 30 basis points and they'll help you build all this. They'll pick the funds, they'll build it out. And there's other, remember the big term was robo-advisors? There's other platforms that do similar things like that. I mean, our firm in particular, we will actually outsource to different, what we call them TAMPs or third-party asset managers, where they do all of this. and we'll kind of note, hey, it's 30 basis points to use this model, or hey, when we put all your assets together, it turns out to be about 25 basis points, whatever the example would be. So even bringing in even some CFPs, and this is becoming more of a trend now, will say, hey, you're not going to get a ton of value out of us if we're just rebalancing and picking funds here and there. You're going to get more value out of the financial planning and what we're going to get to soon in the tax planning. So keep that in mind. Next one here, behavioral coaching. I would argue that this is probably one of the most important ones for some people. For others, it might not mean a darn thing. But behavioral coaching is the emotional control, right? Now, Envestnet listed as included. Vanguard puts a huge number on this, which is kind of interesting because Vanguard says, hey, we believe in index investing. So they're always coming back to like, if you can control your emotion, you have good index funds, you should be in a good spot. Now, Vanguard does say anywhere from zero, no value add, which is how I see it as well, right? If you're a person that doesn't like some crazy headline pops up on the TV, you know the market's plummeting or going up a lot, you're just like, another day. I know I got decades to go, whatever. Behavioral coaching might not be a huge value add to you. But if you turn on the TV, you see the market's moving, you're like, holy smokes, here comes a stomach ulcer again. Behavioral coaching might go a long way for you, right? That is really important. So that's where Vanguard says anywhere from 0 to up to 2%, or what we label as 200 basis points. So very important there on behavioral coaching. I would say, one of the bigger value adds you can get from an advisor, even if you're a DIYer, having a middle person to have a conversation with before you do something radical can be a huge difference in the long run in terms of portfolio value. So really important there. Systematic rebalancing. Not the sexiest thing out there, but right, is your portfolio always in alignment? Did you have some drift? Did you bring it back to the model? This is where Envestnet listed as 30 basis point. Vanguard puts it at 14. Morningstar puts a little dash on it. This is actually one of my favorite categories because this is what we usually say. This is what digital advice should cost. If you're going to find an investment platform that all they do is investment management for you, but not really the detailed financial planning, it feels like 30 basis points is the fair rate for that now. Oddly enough, that's exactly what Vanguard's PIS system charges. So it also seems like a lot of smart people at Vanguard also came to that conclusion. Oddly enough, they do list systematic rebalancing at 14 basis points, but you could also argue they're getting some value from asset allocation and the investment selection that maybe gives them that 30 basis points. Plus, you get the CFP hotline and things like that. So systematic rebalancing, important. Another thing, if you're sitting there, you're like, no, yeah, I'm a DIYer. Yeah, I do this on my own. You're like, oh yeah, I haven't rebalanced in like 8 years. And now because US equities have done so well, my international is down to 2%. It used to be at 20%. And now I'm pretty much 98% US stocks. That's portfolio drift, right? You should have been doing some rebalancing in there. And we'll say rebalancing is one of those topics that's also probably a little bit overdone. Pretty good research that says, maybe once per year, once every few years, believe it or not, just kind of keep an eye on that drift. Here's the one that I think is most important, no matter where you are in the life cycle, right? Whether you're just getting started accumulator years or in the decumulation years, tax management. If your financial planner is not doing tax planning for you, you don't have to list it as tax advice. I know some compliance departments will kind of lose it if they hear that word, but tax planning, right? You're a CFP. You should be doing tax planning for your clients. You should be coordinating with their accountant on how to build tax efficient portfolios, but also make sure you're just overall utilization of the current tax code to make sure they're in the best spot, right? You're optimizing. Envestnet puts 100 basis points, a full 1%. Vanguard puts it anywhere from 0 to 60 basis points. Morningstar says tax efficiency can vary, based on allocation. They list it more to the investment side. I would actually label that as like true tax help. Is your advisor helping you with your W-4? Is your advisor tracking your pay stubs throughout the year to say, hey, you're on track or you're not on track? Did you, on your track to hit the HSA, the FSAs, the 401ks, 403bs, TSBs, all those of the world? That is where I'd also add in another layer of tax management in there. Another one that I love dearly, this is the one that they end with. This is very important for decumulation planning in particular, but spending strategy or withdrawal order. Now, Envestnet puts it at 0. Vanguard puts it as high as 1.2%, listed at a 0 as well. And then Morningstar says it can vary. To me, this is one of the most important parts as you get towards that tail end, right? Having someone helping you with withdrawal order, tax efficient Roth conversions, tax efficient withdrawals, Roth conversions, kind of jump my word there. Huge value add, because when you do get to that phase, there's a lot of moving parts here. Not only are you going to which portfolios at what amounts, what's the tax code look like in that given year? What's your 1040 look like? Are you getting into these IRMA issues where now you're getting surcharges on Medicare? These are very important pieces of the puzzle, and you want an advisor that can walk through all these. That's it. That's the end of the study. Main goals in this video today were when to hire a financial planner, which, when you're reading these topics, you're like, well, I don't know much about the tax management side. Okay, so even if you're nailing some parts, maybe you do need to bring that in. Again, maybe it's not a forever relationship. For some of you, you might need check-ins. For some of you, you might need hourly advice. For some of you, you might truly need someone there, 2 check-ins per year, can send you an email, give you a call whenever you need it. So it's going to vary, but I hope by then providing, what do they actually do? That's a really good list. Some advisors are doing even more. Some advisors might be doing a little bit less, but regardless, that should give you an idea of, what's a full financial planner look. So if you have questions, if you have anything to add to it, drop that in the comments below. As always, thanks for hanging out with me for the last 15 minutes or so. If you haven't subscribed, now's a great time to subscribe to the channel. Click on the bell icon, get a notification every time I release a new video. But again, thanks for hanging out with me for a bit, and I will catch you on the next video.